Howdy, who all my stock market gamblers? Welcome today. I'm Tall Mike. So glad you're here. What do we got going on? Well, like I told you, we got the markets at the record high levels, right? But we're very, very close to what I would call a short-term top, right? I think we're going to get a correction, maybe 5% only, maybe 10%, but we're going to get a little correction. And then they're going to fire up the money printer and we'll probably push it back up higher, right? We got to get the bubble up bigger, blow the bubble bigger. And that's what I want to talk today. I want to talk about the bubbles. Now, we're going to talk about the real estate bubble, but I want to talk about the stock market bubble first. Okay, stock market clearly in a bubble. You can tell a bubble by, well, the Buffett indicator. Let's start with that. Buffett indicator, 200%. GDP, right? The market value of all the U.S. stocks is 200% of the GDP. Okay, that's the Buffett indicator. What's normal? 100% is normal. What's cheap? Below 100 would be on the lower side, right? So we're double, right? You'd have to come down by 50% just to get back to normal. And a lot of times when you revert back to the mean, you overshoot to the downside. A lot of times you'll overshoot that 50% mark and we might go down 60, 70%. But this is what's going to happen. This is how the bubble's going to pop. But Mike, we got AI. AI is going to make the GDP go up. Now that is a possibility, right? Now if the GDP doubles, then the stock market would be fairly priced up here because then it'd be 100% of the GDP. So a lot of people think that AI is going to make the GDP number double. That's a possibility. My take is that what if we go into a recession and the GDP number starts to go down? Then the market has to correct by more than 50% just to get back to the mean and probably going to hit down about 80% low, right? But eventually it's going to pop. All bubbles pop. The bigger the bubble, the faster they pop. When they go, these bubbles are going to pop very fast because these are the largest bubbles in the history of the world. So we have a problem. We're at 200% of the market cap to GDP, right? Now GDP can double and then we'll be all right. Okay, if AI can make that double. My take is recession coming, GDP going to drop, stock market's going to drop even more. Now I want to get over to the real estate side of things and explain how that works, right? Okay, so real estate is the most unaffordable it's ever been, and that's because the housing market is the biggest bubble it's ever been. Now we had a big bubble back in 2008. Everybody admitted it was a bubble. Well, they also, when the bubble started to deflate, came down 34%. They said, we have to start printing money to blow the real estate bubble back up. And they were successful. The real estate bubble much bigger now than it was in 2008. So they never let it all the way deflate in 2008. They just blew it up bigger, right? So we've never had the crash yet. This is an extension from 2008. Don't worry, we're going to get the crash. The crash is coming. Now, why is the crash coming? Well, you see the housing market's at least, I say 40%. 40% overvalued, right? To revert back to the mean. Now you take the other option, which is the incomes. Your incomes could double, right? They're like the GDP number could double, and then the houses would be affordable again. So your income could actually double, and if everybody's income in the United States double, then there wouldn't be any bubble left in the housing market because they would become affordable again. Now, I'm betting against that. Once again, what if your income goes down? What if the recession causes layoffs? What if the layoffs cause people to force selling of their house because they can't make the mortgage payment? Well, then we'd have to shoot below that 40 to 50%. And houses may come down even more than that. You see, the bubbles guaranteed to pop. There's never been a bubble in the history of the world that doesn't eventually pop. Now, of course, when is the timing? Now, my take is that the home prices are rolling over as we speak. They're already starting to roll over in my area, down about 10%. Some areas down as much as 30%. Some parts of Florida, some parts of Texas, starting to roll over, right? Starting to roll over. Some parts of Arizona, Las Vegas, starting to roll over. Of course not in your area only goes up. And I get that, right? I get that. You live in that great area. But eventually the bubble will pop. It is a bubble. You can look back to 2008 prices, and I think we're going to come down to those levels, maybe even overshoot them, but we're talking about 40 to 50% drop. Now there's another bubble that nobody really talks about, and that's basically the credit bubble, right? The credit bubble is the debt bubble, and that's the mother of all bubbles. The debt is the problem, right? It's the debt. When the debt bubble pops, that's probably where all the bubbles will go down all at once, right? When the debt bubble pops, I mean, it's going to be this bust heard around the world because we got the debt is at record highs for government debt, record highs for corporate debt, record highs for state debt, record highs for private debt, household debt, record highs, credit card debt, record highs, student loan debt, record highs, car loans, record highs. All the debt is at record highs. When the debt bubble pops, it all goes away, right? It's game over. The end of the empire for the United States, if you will. Okay, so what we got with the debt bubble is we got the banking system. Now, the banking system, we had a problem there, right? The Silicon Valley Bank went down because why? Because they were buying the risky assets? No. Because they were buying the bond market, right? And the bond market has collapsed 30 to 40%. Bonds went down because rates went higher, right? They were pegged at 0%, then they went to 4.5%, 5%, right? So you got the bond market going like this. And so the banks have lost 30 to 40% of your money. Now, what happens when people that have money on deposit there get a little nervous? People are starting to pull it out already, which is a very smart thing to do. And they're putting it in to real money. They're putting it into silver, they're putting it into gold, but they're getting it out of the banking system. But when you go in and ask for your money, ask for it in cash, they'll bring the bank manager over. He'll ask you all kinds of questions. What's the money for? Are you being robbed? Is anyone holding you up at gunpoint to take this money out? No, I'm just taking the money out because I don't trust you guys. I don't trust the banking system here. Now, why is that? Well, you see, the banks have already lost 40% of your money. Now, what are they going to have to do? You see, the bonds have dropped, right? And that's what the banks are holding. They're holding the bonds. The government just gave them permission to go out and buy bonds with zero money. You can go out and buy bonds if you're a bank, because no one else will buy our bonds anymore. Might as well have the banks just give them to the banks, right? But the banks have already lost 40% of your money. So if 10% of the people won't go in and want their money back, what do they have to do? They got to sell the bonds that they still have left over. What does that do? The price of bonds sends them down lower and lower and lower. What does that do? The interest rates sends them up higher and higher and higher. This is called the debt cycle. It's the debt bubble. The debt bubble is going to pop, right? I mean, that's how it's going to play out. There's the three bubbles. You got the stock market bubble, over double, regular valuation, going to come down at least 50%, maybe 60, 70%. You got the real estate bubble, the most unaffordable it's ever been in the history of the world. That's going to pull back, going to drop, 40%, I say. Could overshoot, could be 50, 60%, right? Could keep dropping even there. You don't know where the bottom is exactly because they didn't let it flush out in 2008. So this is all going to blow up. And then you got the debt bubble, which is probably going to be the bubble that pops to send all these bubbles down. Now, how's it going to play out? Well, I see the Donald out there, right? He wants to cut rates down by 3%, wants to cut them down to 1%. Well, what's going to happen when he cuts rates to 1%? Well, he can only cut the short end of the curve. Long end of the curve is going to creep up higher, right? Going to creep up higher. This is where the debt bubble starts to pop. All of a sudden, we go into recession because the long end of the curve, the 10-year, up at 5, 6, 7, 8%, pushes us into that recession. Well, the Donald just lowered the rates to 1%. What's he going to do? Well, he's going to lower them to zero. He'd like to get them negative, but he doesn't have that power yet. The central bank digital currencies are not really in full effect yet, right? I mean, he just passed a bill to make those private, right? Give corporations the right to be the central bank digital currency, to do the dirty work for the Federal Federal Reserve will be the private companies. I mean, this is just ludicrous in my opinion, but so he'll lower rates down to zero when we got the recession, right? And that's going to make the long end creep up higher. 9%, 10%, creeping up. But this is down at zero. How can the long end be at 10% when the short end's at zero? Well, that's the end they can control, right? The Federal Reserve controls the short end, but they don't control the long end. Long end's controlled by the marketplace. And I got news for you. Right now, they can't get rid of the long end of they have a balance sheet, right? It was 9 trillion down to about 7 right now. They got a balance sheet with these 30-year bonds on it. They can't sell them. They tried to sell them. There were no buyers, right? They're the only buyers. They're the only ones left to buy these. So you're at 0%, right? Now what can they do? What can they do? What else? What can they do? Let me think. Oh, they can print money, right? So they're going to fire up the printing press, right? So everything's collapsing, right? First, everything's going to start to fall. The real estate, the stock market, and of course, the bond market is going to collapse on the long end. That's why you don't want the long end. A lot of people think the long end is safe. They think bonds is safe. That's what's always been throughout the history of my lifetime. Sell the stock market, go into bonds because that's safe, right? No, bonds aren't safe now. The banks are proving it. They're losing their butt and they're losing your money. Already lost your money, but you want your money. They got to sell them and they're going to go higher on the long end. So the bond market's in trouble. So everything's going to come tumbling down at that point. They're going to panic, right? They have nothing left to do but panic. So what are they going to do? They're going to print the money. I'm not talking about 5 trillion. I'm not talking about 10 trillion. I'm talking about 30, 40, 50 trillion dollars at a time. It's going to be called hyperinflation. This is how the empire ends for the United States. I'm sorry. Love the U.S. You know, once we get down, once we feel the pain of what we've done to ourselves, then we can rebuild, right? Maybe we rebuild as a socialist country. I hope not. That's what I'm preaching against. Socialism doesn't work, right? Capitalism is going to get blamed for this, right? It's not capitalism. It's the debt market. You can't have this debt market. You got to go back to sound money. You see, everybody's going to lose confidence in the system, right? Because they're going to print 40, 50, 60, maybe 100 trillion. And that's what's the dollar going to do? What's the dollar going to do? Well, first of all, what's interest rates going to do? Long ends is going to explode up 30, 40, 50% a year. That's what hyperinflation is, the worst thing that can happen to a country. And it's never happened to the U.S. because we're the reserve currency, right? Never happened to a reserve currency in the history of the world. But we don't have smart people running the country. We have lunatics. We have idiots. And that's me being polite with the names I'm calling them. They put us in this position. They cannot get us out. Not one thing the Federal Reserve can do at this point except in printing more and more money. And it just hyperinflates everything. Look, you want to get out of the system as much as possible. Look, I know you got to pay bills and stuff. Leave a little money in the bank to pay the bills, right? But have your real money, your real wealth in real money, in gold, in silver. Silver's still a bargain, $40. You can get $40 for a 1-ounce thing. I mean, gold is so valuable. Some people, they'll pay $120,000 just for a picture of a gold coin. I mean, isn't that what Bitcoin is? A picture of a gold coin? Get the real stuff. Get the gold coin, right? I mean, not the picture for $120,000. You can still get a real gold coin under $4,000. It's going to be over that soon. Look, I was on this channel with $1,700 and people telling me I'm an idiot to tell you to buy it. Well, I'm still an idiot because I'm still telling you to buy it. $4,000 is still cheap, right? I mean, it's not quite there yet, but it's going to get there and you're going to see it cheaper than that. And silver, what was I preaching at? You know, I get some comments, people who listen to me that bought it back at $20. Now it's $40. I mean, that's not a bad return in 4 years, right? I mean, doubling your money. I know it's not like NVIDIA, which just doubled in the last 3 months. And that's why, look, when the stock market goes down, people are going to be running to the real stuff. The real stuff is the gold. The real stuff is the silver. You want to get some before this whole thing goes down. And it's going to go down. Mark my words. You can do you. I'll do me. I'll go real money. You stay in the banking system. You stay in the fiat. You stay in the crypto. That's fine. That's you. That's not me. I'm not that brave. You're much braver than me. Anyways, if you like this stuff, give me the thumbs up. But first, punch that subscribe button and get out there, everybody. Enjoy the day. Bye-bye now.